The unemployment rate in Canada has gone past 6%. This morning, States Canada published their latest job numbers for the month of March, and the unemployment rate came out as 6.1%, higher than the market expectation. The market was expecting around 5.9% unemployment rate as well as 25,000 new jobs being posted, but in reality we actually shed 2200 jobs in the month of March, which is kind of a very worrying sign because up until now we were thinking, okay, so unemployment rate is quite low right now, under 5%, so we don't have to worry about it. We don't have to worry about recession. The rates can stay longer because the economy is kind of absorbing it. But now we're seeing the unemployment rate is ticking up, and slowly and gradually it is going towards a range where things could be very alarming. If you look at this chart, we can see that unemployment rate is ticking up, but it is still around the historical average. So if you draw a trend line, you can see the historical average is around 6% plus minus. So we have to continue watch this trend, and if it goes up to 6.5, 7% or 7.5%, then of course this is going to be a very alarming situation because this is a lagging indicator. Okay, so it is showing what happened in the past. So all the job losses that we saw, from TELUS, from Bell Canada, from Cisco, from Canada Goose, all of these big corporations, those numbers might not have been reflected in this unemployment rate as of now because a lot of companies have longer notice periods, severance packages, so that could take a month or 2 months or 3 months before we actually see those numbers being reflected in the Stats Canada's statistics. So because this is a lagging indicator, by the time we wait for next 2 months, when that number would start reflecting those major job losses from those big corporations, then the situation would have been much worse. Okay, then the unemployment rate could go up to 6, could go up to 7%, 8%, right? And this is where we will definitely be panicking. So 8% unemployment rate, we haven't seen it since global financial crisis. So that could be a big alarming situation if we get to that point. Which is why all the major economists and the bankers are pushing this narrative that Bank of Canada should start cutting rates as early as from June. So I think most of us agreeing that in the next week announcement, they will keep the rates as it is, but they will keep their tone much dovish, so they can give some signs to the market that they're trying to kind of tune this monetary policy where they might be start cutting rates from June, but they will not cut it from next week. And the reason is because as soon as these job numbers came out, we saw the Canadian dollar tanked against US dollar. Why? Because at the same time we saw a much stronger job reports came out in the US. 303,000 jobs, higher than the expectation posted by the BLS in the US, which means the US Federal Reserve is not going to start cutting rates anytime soon. So the more the Federal Reserve is going to wait, more pressure it's going to have on Canadian economy, because if the Bank of Canada starts cutting rates before the Federal Reserve, this will put a lot of pressure on the Canadian dollar, because right this morning when the job numbers came out, the Canadian dollar tanked against USD. The bond yields also rose up and then crashed right after that. So that reaction in the bond market is telling us that if the market is expecting Bank of Canada to cut rate, this is going to be a disaster from the currency devaluation perspective. And mind you, the currency is the basic foundation of the financial system of a country. No central bank would like to sacrifice their currency against the other forex markets. So if they have to choose between recession and the currency, my research tells me that they are always going to protect the currency and they will take on recession. But again, anything is possible. We're seeing oil prices are going up because of the conflict happening in the Middle East, and if oil goes up above $100, this will have massive repercussions across the global economy. It will crash the equity markets as well as the bond markets, and you will see the gold prices will shoot up even furthermore above 2200 an ounce. The main takeaway from this video is there is a good 50-50% chance that the Bank of Canada may start cutting rates from July if they see that the unemployment is getting really ugly, because this is the last job report before the next week meeting. So I think next week they won't do anything, but they will be considering start cutting rates from June. But I think they have to be very careful, because if they cut first and they cut by more basis points, it's going to tank Canadian dollar against USD. Anyway, you let me know what you think about that. How do you see the financial system is going forward, and how you're going to protect your finances against those unexpected events in the financial markets? Let me know, put your comment down below. If you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Take care.